How will the recent proposal to tax unrealized capital gains impact you as a long-term investor? Now, this is not a political discussion. We are not taking sides here. We are just going to talk specifically about proposed new tax law and how it may impact you, whether positive or negative. Okay, so what is this new proposal to tax unrealized capital gains? Well, what are capital gains? Capital gains is when you own an asset, whether that's property, stocks, whatever. You own it for a certain price, it goes up from that price, and then when you sell it, currently when you sell that asset, most of the time you would pay capital gains tax because it went up in value. Now, as it currently exists in today's environment, you only pay taxes, capital gains taxes, when you sell the asset. So when you get the money, you typically owe a capital gains tax on your gains. So what is this proposal? Well, when we talk about taxing unrealized capital gains, well, this proposal says, well, you don't have to sell the asset. We are going to tax you on a proposed or what we think is the value of that asset, whether you sell it or not. And rightfully so, this has some people up in arms asking questions. Where are we going to come up with this money? How does this impact us? How does this impact our plan? And I want to just get really clear on what this proposal is stating, who it's for and who it's not. And again, this is not a political discussion. This is just to kind of clear the air on the policy or proposed policy as it exists today. The most important thing that you need to know on this unrealized capital gains tax is not some of the nuances on how you would pay it or what the rate is. It's who this applies to. And the only people currently in the proposal that this would apply to are individuals and families that have more than $100 million in assets. So for most people, this does not apply. This is a lot of headlines, this is a lot of news, this is a lot of political positioning that for you as a long-term investor, probably if you're watching this video, does not apply. To some, this does apply, in which case you have a great set of problems right now, which is, what do we think about this tax on unrealized capital gains? Because this applies to me because I have investments over $100 million. For most of you, this does not apply. Now, I've heard, well, it starts at 100 million and then the idea is they're going to start pushing it down and down and down. Is it possible? Absolutely. They could start saying, well, it's at $100 million, but it could go all the way down to, the common investor. Is it likely? And I would say it's substantially less likely. And why is that? Well, at $100 million being the target, there are not very many voters who are strongly against this because it applies to them. Many investors are against this just in principle. But for the most part, there's not as many people with a strong position who actually have $100 million that can cast a vote here. And as you move down, going from 100 to 10 million or to 1 million, and the amount of people this applies to, the more people are going to be against this policy. And so at 100 million, right, we don't know if this is going to pass or not, but what we do know is on the opposition side, there's not as many people this applies to. And so it's less likely that it's going to move down and start impacting people at lower asset levels. And so more than anything, when you're hearing the news as we move into election season and you're hearing these strong positions based on tax policy, based on really anything, read the details, see if this applies to you, and decide whether this is more of a decision in principle or whether it's actually going to hit your bank account. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.